Well, a very happy Thursday to you. I'm Marlon Bowling with you, your tour guide to the ag commodities. Always a pleasure to visit with you about our ag trade. With me, I have Brian Hoops, the president of Midwest Market Solutions. He hails from Springfield, Missouri, and he joins us here this morning to take a look at the setup for today's trade. Brian, normally today you and I get the chance to cover the weekly export sales numbers. Today we don't have any to talk about. Had the holiday on Monday, right?
Right. Good morning, Marlon. Yeah, no exports today. The EIA report that was supposed to come out yesterday, that's delayed, so that'll be out 10 o'clock this morning. Looking for a small decrease in production, kind of a slowdown this time of year because of the holidays for corn usage there. Otherwise, it's pretty limited as far as any news to talk about this morning. There was Egyptian wheat tender yesterday, and looks like that's probably going to be filled by Ukraine. They're the lowest and cheapest price. Now, maybe they'll buy some Russian wheat as well because Russia is flooding the offers with opportunities to buy wheat. But for the most part here, it looks like it's going to be Ukraine. It's given us a little bounce in wheat futures overnight. Corn and soybeans trying to trade higher, but really with no conviction. Probably going to see maybe some more short covering in wheat and corn to end the year. That's where the funds are holding the biggest shorts. And capping the rallies are going to be decent rains in the forecast for the next 2 weeks for most of Brazil and parts of Argentina as well.
Well, now that you bring that up, does Ukraine have the ability to still ship grain out of there?
Yeah, it's an interesting question because just last night there was a Ukraine vessel or a ship moving into Ukraine to try and load some grain to ship out, and it hit a mine. So it's pretty dicey as far as trying to ship some product out. But apparently Ukraine, the government believes that they can send some product out as they are tendering here and at the cheapest price that we're seeing on that Egyptian wheat tender.
Would that be supportive to some extent on the wheat and corn trade?
Yeah, it should be. Chicago wheat up about 6 cents overnight or so, leading the values higher here. I think the idea is, maybe U.S. doesn't participate in this tender offer, but it is taking world wheat off of the markets, and we could see, additional fund short covering because it's the end of the year, and ideas that maybe we'll see a little bit of a bounce here in the wheat market and better improvement in demand.
Okay, well, we can see the wheat there, as you mentioned. March Chicago wheat was 6 3/4 higher overnight at 629 3/4. And really only about a penny away from its high of the overnight trade. Now in Kansas City, it's been trying to keep up. We have the March actually 4 3/4 higher this morning at 639 3/4. When I came in, it was about 6 higher. In Minneapolis spring wheat, you had the March contract up a nickel at 726 3/4 overnight. Let's visit this feed grain market. On the corn, we had the March up a penny and a half this morning at 478. Small gain, not anything to write home about. But I was talking on the radio show just a little bit ago here on Sirius XM 147. On that commodity wrap show, I was talking about the fact that we have this $2 billion plus carry out on the corn hanging over our head. And I just have a hard time believing that at the local elevators, they have any reason to really bid up anytime soon.
Yeah, I don't think they do for the corn market, especially. There are piles of corn, unlike last year, especially in the Western Corn Belt. A lot of elevators that have not had corn sitting on the ground before have a lot of ground sitting or a lot of crop sitting on the ground through the winter months. And so there's, some of it probably gets sold after the first of the year. Just not much incentive for these producers to really narrow the basis, or the elevators to narrow the basis for producers through the winter months. I think we're trying to find a price level that'll stimulate that demand, that we're going to see prices just kind of languish for the next several months until we can get into the Safrinha growing season, get into the U.S. growing season. That's when we have opportunities to see large price appreciation. So patience may be kind of the winning strategy for this corn market. If you're still holding on to corn, plan on holding it into the spring or summer months.
I was looking at a chart a little bit ago, and well, you can kind of see it on this one too, a 3-month chart on the corn. It just has the appearance of a descending triangle pattern or a little bit of a wedge pattern shaping up here. So it looks like it's trying to come together a little bit, and it's probably about due for a breakout one way or the other.
Yeah, and we could just trade kind of sideways. I think sideways to lower. We're trying to find that price level that's going to stimulate that demand. And so I don't think we're going to break out to the upside until we get into those growing seasons that I mentioned. Through the winter months here, probably the best thing we can do is build that base of support where we improve our exports, improve ethanol demand, and see a large amount of feed usage because of cheap corn.
On the soybeans overnight, let's take a look. Yep, we were 4 cents higher on January, and on the March, we were up 3 in the overnight trade. We'll come back and we'll talk livestock with Brian Hoops after this. All right, we're back with Brian Hoops of Midwest Market Solutions. Let's talk a little about the livestock trade. Yesterday we had divergence, Brian. We had the live cattle under a little pressure. You had the feeder cattle coming back to go a little higher. How come?
Yeah, the feeder cattle probably reacted to the corn market being lower. It just doesn't take much news to drive prices one way or the other. In fact, you watch the feeder cattle market, it barely traded at all yesterday. Live cattle had a little bit of mixed trade. December higher, but it goes off the board this week, and it's pretty much in line with where we expect the cash to be. So it's already factored that in. We're still looking for that cash trade develop. The rest of the contract months pulling back, and I don't think you can really read into the action on futures markets this time of year really telling you anything significant. You look at the news or the fundamentals for the cattle, I think you have to be disappointed that the cutout values cannot catch hold here. We're in holiday trade. You had shortened holiday period during Thanksgiving. We really didn't see much of a bounce. This week, we only killed 100,000 head on Tuesday, probably due to that snowstorm that went through the Dakotas and Nebraska. So that slowed the kill even further. Plus, you didn't have any slaughter on Monday. We're going to come into this week with a very low kill number, and yet the boxes cannot gain any footing and rally. It's very much a concern for the demand for the cattle market, and it hurts back our margins. They were maybe around $38, $39 a head to the positive, and now they've dipped a little bit under $30 because of those cattle values just struggling in here. And longer term, that's a concern for the market.
Well, looking at the close yesterday, February live cattle, they were down $1.12 at 169.27, and the other months were under pressure too, but not quite as much. On the feeders, here you had the March contract 82 higher on the close yesterday at 225.40. So they were about 90 cents off of their low of the day, but well off of the high too. Lean hogs, they finished mixed. We'll give them a higher trade on the February. It was up 57 cents. All the other months were 15 to 42 cents lower across the board on the lean hogs. It should be interesting to see if they can rebound today or not. All right, Brian, thank you for talking with us. And gosh, if we talk tomorrow, maybe then we can cover the weekly export sales numbers. So stay tuned for that. Brian Hoops with us. He's with Midwest Market Solutions in Springfield, Missouri. Tammy, good morning.
Good morning.
How are you?
Off and running. I'm doing good. We're hanging in there.
Short trading week.
It is holiday week, holiday trading, but still a lot to talk about.
We're on the back half already.
Yeah.